Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me is Sean Ashton and Hechter, both from Anchor Capital. Now today we're talking Harley-Davidson, an American motorcycle manufacturer founded back in 1903. The popularity of this unique brand has seen Harley become the world's fifth largest motorcycle manufacturer, widely known for its loyal following. Gentlemen, I'm actually so tempted to be doing this and laying back just to depict the Harley-Davidson lifestyle, but perhaps let's paint a picture with regard to this particular company, unique in its mandate and a significant following from across the globe.
So I think, what's quite nice about the business is it's a fairly simple business. It's a clean, pure play on what's really an iconic brand. I think everybody would be familiar with Harley-Davidson motorcycles. The operating metrics of the company are particularly attractive. So it generates, for a manufacturer to be making a 15% operating margins quite high. It's a lot more than certainly many car manufacturers would be operating at. And at the same time, they're generating about a 30% return on equity. So quite a nice business fundamentally, but it's not without its issues. And I think the biggest issue that they probably face, and the question mark that one might want to raise in the investment thesis, is the fact that they have quite a specific target market and quite a big geographical concentration to the US. And demographically, we're not sure that the trends are all that favorable for them.
Have we seen a particular link when it comes to economic growth, especially in the US and economic cycles that take place from a global perspective, and the link between that and Harley-Davidson sales?
Well, being a sort of big ticket item in the US, you saw quite a big drop off in sales post or in the wake of the global financial crisis. At the same time, Harley-Davidson finances a large portion of the motorcycles they sell, and that financing business also saw quite a big increase in the credit loss ratio, which actually resulted in them having to go to Warren Buffett's Berkshire Hathaway and construct a preference share structure to bail out the financing business. So it's got quite an interesting history. In terms of link to GDP growth, I think there'll definitely be some correlation there. But ultimately, Harley-Davidson's got a loyal following, and I think that trend should continue. As Sean mentioned earlier, we're still not 100% certain on that, but it's definitely something that we're pondering at the moment.
On that following, though, we did have a graphical depiction on screen just a moment ago with regard to the geographic layout. And as you've mentioned, strong US focus. One would have thought that Europe as well as other prominent areas might feature quite prominently, but I see Asia
Pacific growing quite strongly, but still 2/3 of sales from America. And I think the key issue that we have here is that the typical demographic that has gone out and bought a Harley-Davidson in the past has been kind of north of 40 years old, perhaps a bit aging, midlife crisis, wanting a bit of a toy to enjoy life.
So you don't own one, in other words?
I don't personally own one.
Not yet.
Not yet anyway. But the issue is that the demographics that population is shrinking in America. So the demographics of aging are meaning that kind of middle age is becoming more significantly older, and there's not many people with the required incomes that are moving into that space. So I think demographic trends are potentially a problem for them, and at the same time they need to convince customers that they need to convince a younger customer set to buy their bikes, because if they don't do that, they're going to start running out of growth in their traditional segment. So they've got to make the brand sexy enough for 30-somethings to go out and buy a Harley-Davidson. It can't just be an old man's bike or middle-aged man's bike, so to speak. So I think that's the challenge that they're facing, and certainly when you look at the numbers, they are facing pretty much stalling sales growth at the moment. What is quite attractive, though, is that the valuation of the shares come down significantly. It throws off a lot of cash, so you're basically buying it at a 10% free cash flow yield. And they have the ability to manufacture quite a lot of earnings growth just by virtue of the fact that they're reducing their share count through buybacks.
Wouldn't we also want to see them diversify their operations, though, other than just purely manufacturing motorbikes and providing the financing for them? Liam?
I think in terms of diversification, what you're going to see is geographic diversification. So what's hurt them over the last year is increased competitive pressures in the US. So with the revival of the Indian motorcycles brand, that's hurt them, and as well as competitors that are able to manufacture motorcycles in emerging markets. So currency has also played a big role in the sort of competitive pressures that you've seen in the US. Harley-Davidson is the only, they claim to be the only motorcycle manufacturer that strictly manufactures in the US. And at the moment, what they're going to be doing is bulking up an Indian manufacturing facility to be able to service the regions outside of the US so that they can absorb some of that margin over there.
I'm a little bit worried about the growth prospects here, even though the share price, as you mentioned, is discounted. But what kind of investor would actually want to look at picking up this particular stock?
I think the typical profile of investor would be yield. So yield is quite attractive. You've got a dividend yield of, we estimate, about a 3% or so. So in a global context, in dollars, that's quite attractive. At the same time, like I've said, those free cash flows allow them to achieve earnings growth despite the fact that top line is not going anywhere at the moment. So if you can take the view that they're able to push younger profiled products into the market, and they do have a motorcycle, a lower priced motorcycle to compete with other brands, which we hope can get some traction. Whilst you're waiting for that to evolve, you're kind of paid to hang around right now because the valuation is low, about a forward 10 PE, 3% dividend yield, great free cash flows. And at the end of the day, I think I would bet that this business certainly is likely to be around for a very long time. I think the growth outlook in the short term perhaps is not clear, but this is an iconic brand that I believe with the right management team they can do something with it.
And as you've mentioned, the sales post the global financial crisis have been strong. Earnings also seeing some kind of levels of sustainability. So it's in a comfortable position, as you mentioned.
I think in terms of whether or not it's in a comfortable position, they'll only admit that it's comfortable when they can see sort of trend sales moving upwards again. So at the moment, management have sort of over the last year or so started to guide towards 1 to 3% sales growth unit production growth and shipment growth, as opposed to the 3 to 5% that you were seeing before that. So as soon as the market is happy that has now plateaued and could possibly go back up to the 3 to 5%, I think that's when management will be happy that things are moving in the right direction. I don't think that they're happy that they're only able to manufacture earnings growth out of the fact that they're buying back their own shares. I don't think that's a comfortable position for any management team to be in, but they do have the ability to do that, and that rewards shareholders.
Would financing also be another model that they need to explore when it comes to attracting a younger audience, as well as ensuring the stickiness?
So that's a big part of their business already, and that was part of the mistake of 2008. I think they pushed too much inventory into the market leading up to the financial crisis, and in that process they had quite an adverse default experience, as Liam's already alluded to, in their financing unit. About 60% of the motorcycles that are sold are financed, and the vast majority of that would be by Harley-Davidson Financial Services. So this is already a well-established business unit of theirs. I think really the bigger challenge is to have the right product set and the right image to convince that younger buyer that actually this is a sexy brand again. It's an iconic brand, but it's targeted at a very specific target market that perhaps is becoming less relevant.
Having said that, though, the ones that do target the younger audience, the Liams of this world perhaps, and yourself, Sean, are they winning?
So certainly these guys have been losing some share to the likes of an Indian, for example, where the price point is a little bit lower. I think what Harley-Davidson, to their credit, has done quite well is avoided the pitfall and the trap of trying to discount their products to save market share. Because ultimately that can be quite brand damaging. If you start selling your product too cheaply, people start to wonder, well, actually,
the aspirational value.
There's no aspirational value there anymore.
And at the same time, if you know that the price is going to be cheaper, it's in a month's time you're going to hold back on purchasing. So I think the strategy that Harley-Davidson have taken has been sufficient for what the challenges that they are currently facing. They are trying to attract a younger audience. At the moment in the US, they've got a very sort of there's a high concentration in the sort of markets that Harley-Davidson are selling into. So you'll probably see that would probably be a negative for me, that they own so much of the market. I think they own at the moment about 50% of the market. Is that sustainable? Well, that's up for debate. But they do have the ability to grow offshore, and I think a large emphasis at the moment is for Asia specifically. They're growing at about 8% in Asia. I think that they'll try and push quite hard for that. It's an aspirational American brand. Exactly.
Well, let's find out now from our experts whether it's time to buy, hold, or sell this particular stock. Let's find out what their views are. Sean, let's get your views on buy, hold or sell Harley-Davidson.
So there's still some work that I want to do on the demographic issues facing this company. I think it's leaning towards a buy argument because I think the share price has fallen far enough to actually de-risk the investment case quite a lot. But I need to make up in my mind whether or not this is a multi-year structural story of flatline sales growth. If that's the case, it's less obvious to me. But if they can demonstrate some ability to get traction with a younger buyer with their motorcycles, I think this will represent a great entry point. And we're still doing a lot of work on that, but I think the value argument is tilted in one's favor.
So still on the fence for the moment.
Slightly on the fence, but leaning towards a buy argument.
And I guess with the market volatility, should the share price depreciate even further, then maybe you'd get in at lower levels too.
Sure.
Exactly. Liam, your views?
Yeah, I mean, I completely agree with what Sean said. You know, the business has de-risked on the back of the share price coming down. So you're not buying it at the historic 15 that it has traded at for the last 5 years, 15 times earnings. At the moment, you can buy it for just over 10 times earnings. And ultimately, my view is that if you can see some sort of evidence that the sales can trend sort of a little bit of, you know, not aggressive sales growth, but start trending upwards again, I would expect the share to go back to its historic PE ratio that it's traded at in the past.
And still a lot of confidence in the management that's in place at the moment and how they're trying to veer or control the environment that they're in and the company going forward?
I think they're doing the right things in terms of, you know, not buckling on pricing issues, but ultimately I think that the depth of talent will be revealed in the product set that they bring to market to attract that younger buyer, and the traction, the extent to which that gets traction.
Well, we'll leave it on that note. Sitting on the fence and slightly uncertain as to what the outlook for Harley-Davidson is, but we'll leave it here for today. A big thank you to both my guests for giving us their views on Vroom Vroom Harley-Davidson. Liam Hechter from Anchor Capital, together with Sean Ashton, also from the same organization. Do be sure to join us again next time where we talk more stocks.